Once during a real estate seminar I was conducting in Dallas, Texas, I was approached by a gentleman around 60 years old. He had heard me mention that my rich dad taught me to invest in real estate by playing Monopoly. That game, as we know, reveals a simple yet powerful strategy. Buy 4 green houses and trade them for a red hotel. With a curious glint, the man came over and asked, "Do you think I should turn my houses into hotels?" I smiled and asked him, "How many properties do you own?" After a moment's thought, he replied, "A little over 700. I invited him to sit down so I could learn more about his story. And soon I discovered he was a farmer from West Texas. For the past 40 years, he had bought multiple houses each year to rent out. This man had weathered the highs and lows of the oil and cattle industries in Texas, especially during times of crisis. In those periods, he bought houses from people in financial distress, sometimes even renting them back to the former owners. As his cash flow grew, he invested in more properties, typically costing less than $65,000 each, and he never sold any of them. By then, he was earning an average of $200 per month per house. Despite my experience in investing, I was impressed. This man was making over $145,000 per month. That's over $1 million per year, just from rental income. And then he asked me, should I start selling some of my houses and buy hotels? Buying these little green houses takes a lot of time, and the idea of investing in larger buildings sounds appealing. I laughed and shook my head, and I told him, at the next seminar, I'd like you to be the speaker and me to be the listener. I then gave him my financial advisor's contact information and suggested he speak with them. I added, "You're already on a level far beyond mine," as he thanked me. I remembered 40 years back when my rich dad played Monopoly with me. The difference? At that time, I was using little green plastic houses, but this man, he was playing the game with real houses. It was an absolutely extraordinary experience. Wealth and statistics. According to statistics from the US Department of Health, Education and Welfare, by age 65, only 1 in every 100 people is very wealthy, are financially secure, still need to work out of necessity, rely on help from family or the government, and 36 have already passed away. I believe one reason so few people achieve great wealth is the inability to change when necessary. Many people want to change, but they are paralyzed by fear and doubt, thinking, what if the market crashes? What if I make a mistake? What if I can't pay the debt? The truth is, many people become prisoners of their own uncertainties. Nowadays, there are young people making millions of dollars online without even finishing their studies. These young people, they've never had a job and may never need one. Whenever you owe money to someone, you become employed by that money. For example, if you take out a 30-year loan, you automatically become an employee of that commitment for those 30 years. But my rich dad taught me, never be the one repaying the loans yourself. He liked investing in rental properties because when he took a loan from the bank, it was the tenants who covered the financing. That was a true genius move in the world of investments. Real estate strategy. Imagine you find a nice house for sale in a decent neighborhood. It needs some repairs, but it's surrounded by well-maintained buildings. The area is safe and located near a local public university. The owner wants to retire and is asking $110,000 for the house. You negotiate and settle on a price of $100,000. You have $10,000 saved in your bank account, so you take out a loan for $100,000 to cover the purchase and closing costs. Now, your monthly mortgage payment is around $700. But here's where the smart investor's mindset comes in. Instead of paying the mortgage yourself, you rent the house to 4 students, each paying $250 per month. That's a total of $1,000 per month in rental income. Your mortgage payment? $700. Your profit? $300 per month. Passive income. You don't have to work for it. Your tenants are paying off your 30-year mortgage for you. And the best part, you still earn an extra $300 every month. Sounds interesting, right? This strategy allowed the farmer from Texas to accumulate wealth over time. By thinking big and focusing on cash flow, he built a multi-million-dollar portfolio. Now, is real estate investing risk-free? Of course not. There are always challenges. Market risk. Property values can fluctuate. Interest rate risk. Mortgage rates may increase. Maintenance risk. Unexpected repairs can be costly. Tenant default risk. Renters may stop paying, but the key is understanding these risks, and having a solid strategy. If you enjoyed today's video, remember, this channel is here to bring you more financial content. So if you found this information useful, leave a like and subscribe so you don't miss a thing.